Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. On today's show, we're going to be discussing Bank of America's latest research report on Palantir. Today's July 1st. We've had 6 months of the year. Palantir is up about 50% in those first 6 months. So a good first half for Palantir. Bank of America, Mariana, one of the main banks and analysts that actually covers Palantir, put out a new research note on Friday talking about the expectations they have going into the next 6 months of the year. And also what they saw in the first 6 months that they liked. And I want to go through that research note, talk about what they said that was good, what was bad, and ultimately what they want to see moving forward. Additionally, last 5 minutes of the show, I'm going to have one of my friends come on who is named Jason. I'll have his description. I'll have all of his information in the description. He is big on technicals, and he came on the market close last week. We talked about a bunch of stocks. Palantir is one of them. The reason I want to bring up his clip in the last 5 minutes of the show where he discusses the technicals about Palantir is because Bank of America, in their research note, not only did they talk about the fundamentals, but they also talked about the technicals that are shaping up to be, in their words, really nice for Palantir towards the latter half of the year. So we're going to discuss the fundamentals of the report. We're going to discuss the technicals, and then Jason will come on for those last 5 minutes, and you guys will see him get to kind of break down what he wants to see from a technical perspective for Palantir. All right, new research note. Let's get into it. Okay, so first thing we got to look at here in the context of Palantir is, well, two things. This is something that came out this morning. This actually was not part of the research note, but it's really cool, and then we'll get to the actual research note itself. So Palantir was part of the top 9 stocks Bank of America said you should go long on for 3Q 2024. The one stock they had an underperform on was CarMax. Vertiv is there, Spotify is there, Goldman Sachs is there, General Electric is there. So a bunch of these different names. Nice to see Palantir is there. Bank of America covers many stocks. So for Palantir to be one of the 9 names that the company believes you should go long on was exciting to see in the context of Palantir. Thousands and thousands of people read Bank of America's research note. Their institutional clients take it very seriously. I mean, they literally make, buys or sells based on what Bank of America tells them. So really nice to see that Palantir got some momentum there. The stock right now, currently, as you can see, Tesla's at 211 today. Palantir today, 25.87. We did touch 25.93, so we got very close, or 25.97. We got close to 26 today, but we didn't hit it. 25.87. We're up about 2% on the day. Now, here's the big research note we got on Friday that I want to go through and discuss a bit more in depth. So let's get into it. From Mariana at the top of the report. Disruption has defined the first half of 2024. Across industries, we saw disruption in supply chains, production delays, labor constraints. In the markets, disruption ranged from inflation to economic growth and varying Fed expectations. However, we argue that the most disruptive theme has come from the proliferation of AI. We're still in the early innings of AI adoption and expect Palantir to continue to see significant upside from this trend. Defense AI integration and preparing for a takeoff, commercial momentum from boot camps and other channels, and 3 other catalysts. S&P 500 inclusion could add institutionals. We maintain our buy and $28 price target. So that's kind of the core thing in a nutshell why they're bullish on Palantir. S&P 500, momentum from boot camps, defense, government, business going well, $28 price target. Now, one of their technical analysts says right here, bullish correction sets up a move towards 30. Palantir remains within bullish trends on an absolute price basis and relative to the S&P 500. This supports continued upside and leadership for Palantir from the positive trends that started in December 2022. Rising 13, 26, and 40-week moving averages at 22, 21, and 20 respectively underpin this bullish backdrop with upside potential for Palantir beyond the recent highs of 26.57 and 27.50 in March, toward the 61% retracement for the January 2021 into January 2022 decline near $30. Essentially, what they're trying to get at there, from my understanding, is that we have a ton of support and we've bounced very heavily from the low 20s and we've touched the 26, 27 levels. So if you look at the 61% retracement from January 2021 into December 2022, there is a wedge that gets us to that $30 range. Obviously, the fundamentals need to show the growth is intact and that, in my opinion, Palantir needs to raise guidance closer to 25% by the end of the year. But if that's the case, $30 is possible, and that $30 also is possible because Palantir has the momentum based on the narrative that is in 2024, which is AI. Now, we're already up 50% of the year, and I would say we've definitely gotten an AI premium. If we go to $30, we'll be up 100% for the year. The beginning of the year, the stock was at like $15 or like $16. So, if we end up being 90, 100% up towards the end of the year, I think that would be a phenomenal year for Palantir. It is asking for a lot, so they have to put up the growth to get there. But if the growth is there, the fundamentals are in check, and the technicals, we haven't gone below $20 since February 5th. After After Q4 earnings, we never saw 20 again or below 20. There is obviously a lot of momentum for Palantir to maintain its leadership as one of the best AI stocks this year. Okay, let's get into fundamentals. Defense AI integration preparing to take off. 2024 is setting up to be remembered as the year the DoD shifted towards the software and rapid tech modernization. In the first half alone, the DoD named a software company the prime on a hardware contract, which is the Titan contract we got for Palantir. Second, non-traditional contractors were awarded both of the attributable and more sophisticated future autonomous aircraft. These are contracts that companies like Anduril got. And three, the Secretary of the Air Force flew in a fully autonomous F-22. On AI, we believe Palantir is positioned as a frontrunner to capture the growing demand for both highly complex AI next-gen developments, where the company continues to get awarded non-competitive deals like Maven. No one else competed for that. Second, the need for AI proliferation and democratization. Palantir is strongly positioned to provide the DoD and other highly regulated agencies the common data infrastructure baseline to be rapidly and securely incorporated other applications and technologies. So from a defense perspective, Marianne is very bullish. I agree with her. I mean, the amount of contracts we got, Maven, Titan, we've talked ad nauseum about how important it is for Palantir to be a software company to get a prime contract. It seems very, very likely that defense is going to go well for Palantir towards the latter half of the year and also going into 2025. Commercial. Momentum from boot camps and other channels. In commercial, we continue to see a strong demand environment mainly fueled by disruption. Disruption coming from the enduring supply chain tightness, from quality and production capacity issues, from labor constraints, from inflation. Most prevalent, we see the challenges of integrating legacy systems and assets to new software and smart assets across fonts and being a primary catalyst for new customer growth. We anticipate accelerating commercial growth for Palantir as the benefit from expanding sales channels. A, faster and cheaper boot camps versus traditional 6-week-long pilots. B, joint ventures with key industry players. And C, platform partnerships with consultants like PwC, etc., building their own applications on top of Palantir's products. And D, further penetration within existing customers. Now, this part I think here is very important. The company has seen little sales volume convert from the recently launched bootcamp program. 90% of first quarter 2024 year-over-year growth was driven by customers existing as of December 2023, and the incremental 40-plus commercial clients only contributed $130,000 each to the quarter, which is 5x lower than the average commercial customer sales. More than 900 organizations participate in bootcamps as of early May. This compares to a total of 427 commercial customers as of Q1 2024. As we approach the 8-month mark since the launch of AIP bootcamps, we expect to start seeing the beginning of more meaningful conversion rates, considering usual sales cycles last 6 to 9 months. Essentially what they're saying is that Palantir has not monetized everything they've done in the context of AIP. And because they've not monetized it, there's a lot of growth, and Palantir has been able to beat their numbers, but they haven't really been able to generate the revenue from all these new clients based on having these boot camps. What happens when the boot camp conversion goes up, and what happens when Palantir turns up the monetization from the existing customers they got from the recent, basically 500 boot camps as of 2024? That should be a catalyst for growth, and we're projected to do $2.6 billion. That gets us closer to 2.75, 2.8. I think the street's really, really going to like it. Finally, the last catalyst, they said, is S&P 500. There's a strengthening case for Palantir to become a member of the S&P 500 index. By the next index rebalance event in September, Palantir would have been eligible for 12 consecutive months. We think that becoming a member could attract more institutional investors, passive and active, and thus reduce volatility. I mean, that's just going to be a good thing if we get into the S&P 500. Will that happen? I don't know, but it will be a very, very good thing if Palantir gets into it coming into September. Then they put a couple of charts. Palantir is re-rated to the higher end of the AI group, as you can see in the first chart, and that's obviously because Palantir has gone up 50% this year. So as you can see from a EV over sales growth multiple in the last 12 months, Palantir is at the higher end of the range. If you look at May 2024, this is the Forbes AI range compared to Palantir. But they look undervalued when considering their free cash flow. So Bank of America is basically saying, hey, we know they're getting a bit of a premium here at $25, $26, but when you look at their free cash flow, they're going to do about $800 million to $1 billion in free cash flow this year alone. If you project that out to 2026, they actually look relatively cheap. And from that perspective, that's how Bank of America comes to this conclusion that $28 is not the craziest price to assume in the context of Palantir. And then finally, they talked here about the technicals. I already read a little bit of the summary in the beginning of the video about their technicals. So I'm going to have my friend Jason come on now, and we're going to play that clip. And Jason's going to talk a little bit more in depth about what he wants to see from Palantir in the context of the technicals and where he wants to see the price start to move for him to feel comfortable that we have that potential move up back to $30. Again, 30 would be incredible. All of us are waiting for it. We're all kind of just like, when is it going to happen? And I tell myself that, the stock's up 50% this year. If the stock ended at 25 when it was at 16 at the beginning of the year, we all would have been very happy. We got it really early. I mean, we got it within the first 2 months of the year. At February, we were pushing 25, 26. So now we're asking for a bit more, but we probably going to get a rate cut from the Fed. Momentum in the AI name is there. If Palantir can really capitalize on the growth over the next 2 quarters, they can differentiate themselves from all the other SaaS players because they're a SaaS company with a real AI moat. And then the analyst's average price target is around $25, $26. If Palantir crushes the next couple of earnings and that goes up to $30, $32, I think there's a real good shot we get above that $30 range. But again, it really all depends on growth, guidance, the macro, and if Palantir can capitalize on this AI opportunity. All right, that is it for me. Thank you, everybody, for listening and watching. We're going to listen to my friend Jason break down the technicals now for Palantir. I'm going to leave all of his links in the description if you're curious or interested in following him. And let me know your thoughts as well about Bank of America's research, what you think about the technicals, and where you really see in terms of the potential for Palantir to get back to $30 at the end of this year. Here's Jason. Thank you, everybody, for listening and watching. I'll see you in the next one.
And again, sitting with that story theme, right? What does this tell me that investors are doing here? They're accumulating shares, and then they got kind of fought up, like fed up, and they sold right in this area. So they were accumulating essentially right in here, right? And so in this time period, they were accumulating shares right in here. All of these are little wicks that people are buying. And then I'm going to drop down to a daily just to see if there was an earnings event. So earnings, good. Something happened here that changed the fundamental story. Maybe it became a little bit overvalued. Do you see this?
Well, I mean, also the Fed decided they were going to start raising interest rates.
Yeah. Right? Okay. So whatever it is, something changed in the fundamental story right around this area. And so what you have to say is, okay, this is 25. What is this? 25 and change?
Yeah.
$26. So $26 is actually a huge level. This was that prior level where people were selling anyways, right up in that area. So I'm just going to take this and say, okay, so this area here, this is what we're going to call like overhead resistance. And all I'm going to do, and we're way back there, right? So all I'm going to do is I'm going to say, okay, if we're over that, then we're in full blown breakout territory. And between now and then, this became another type of accumulation right in here. And so, down here, okay, Palantir is undervalued. Story has changed. New earnings data is coming out. We're now beating revenue, beating the EPS, right? We're growing. There's a growth story, right?
Became GAAP profitable, right?
Yeah, economy's turning the corner as a whole. And so right now it's this kind of like this general area. I'd actually say up to 28. If it's over 28, she's probably gone, right? Because then we're looking back into this type of area and it might be like a massive rocket ship. But until then, I would assume that so stocks are either running or they're resting. And I think that's where people get really kind of caught up because they want to see their stocks just go to the moon every single day. And that's not healthy, right? It's just not healthy. And so price action, when we say price action like this, when you read this story, this is a healthy story. That what's happening right now is that Palantir is accumulating a net new base of investors right in this 20-something dollar area. And every time they've done this, right? So these, again, one more time, right? This was prior, like they sold here, then they were buying it one more time right in here. So all these guys are in, you're getting more investors buying these dips right in this area. This looks pretty bullish in my mind. So if you want to be really specific though, how you do this. So we've established those levels. And so when you want to say, where is it going from here, technically speaking? So what we're going to do is we actually draw these things called fibs. And I'm just going to go, you stop me when it's time.
What is a fib?
It's a measured move, right? So back in the day, there was this very old school thing where like you have these box trades. And so box is like, I'm measuring this consolidation range. And what happens is that, I just duplicate it. If it were to break out of this range, it's essentially, and I'll take the fib off, 1x that box, right? And you can see that over here. Here's this box, right? Consolidation range. And I'll just take this off for a second, just so you see it. So here's this box, just how stocks work. And you overlay it one time. It's a perfect duplicate of this consolidation right there. And that's all a fib is essentially, whether it's an extension or a retracement. it's kind of like a measured move on the next, let's call it, impulse of the stock. If
And
it
stocks tend to have a lot of fibs in their chart
it's just,
history.
yeah, it's just like, there's a lot of sayings like the longer the base, the higher in space kind of thing. It's very similar. We're like, if you take this, and we can, I mean, every single time, right? It's it's just a way to know, uh how do I place my targets, right? So if we go up, if it breaks out of this level, where does it go? It goes right here. And that's
Mm,
exactly where that kind of targeted. So it's just kind of like it's extended. But how do you know when to take profit? So once it gets to that doubles the kind of consolidation move here, right? So let's just say, so this would bring, that's a 33.50 kind of level. But depending on how long this consolidation is, this consolidation really, and you have to take it with a grain of salt, is so far 142 days, right? So call it 6 months. So it could take 6 months from now to get to $34 easily, right? And so you don't think it's going to be there tomorrow, but if you see it at 33, just know that's probably a time where it's going to take another rest because it's had a really nice run.
right.
Markets don't run and then reverse. That's what people think a lot too. They like, oh, it's run too much, I'm going to short this stuff. No, right? Like they run and then they rest. And this is very healthy price action.
So what is a level Palantir investor should be looking at for it to break out of this $20 range? Like, do we have to get above 28 essentially to break through?
Yeah, really, like yeah, 20, it's this high right here. It's 27.50.
Mm,
Um, right. And it's right here. So what you're looking at, it's like you don't want to see it just get over it intraday or after hours one time. Like that's not good enough. You need to have a couple days like opening and closing above that level, and you're likely off to the races. Because you could have something like this. We have a couple days that it chops around here, but if it gets right back under, that's no good. Does that
right.
make sense?
Yeah. 100%.